That's what it looks like. It's a nice measure move down on a weekly chart, right? You can see it. It's 1, it's 2, right? And then then I'm looking for 3. I am up 18% this week, so I do have a drink. Cheers. You make money, you have the right to celebrate. All right. This week I made 18% overall, which is really good. First week of 2022. If I can maintain a 5% gain week on week, I could potentially make a living doing this in about a year probably. So if I can pull that off, that'd be incredible. And I'm thinking about trying. I'm going to do it. I'm going to try to do it. Absolutely. It's going to take me a long time, but I got to tell you, there's a lot of money to be made here using these chart patterns. I've been studying Fibonacci for a couple months, ever since I YOLO'd for MOAS, and it totally failed me, right? So I looked at this analysis, and this is what it said. This is what it says, that the price is moving lower, much lower. And the measured move down, I think, is the pattern we're watching play out over and over again on the different time scales and at different times. So this big one, all right, this is what I was just showing in the intro. Leg 1 is pretty tall, right? Starting up towards 45 and falling all the way down into that 2080 level. That's $25 first leg. That's nuts. All right, it's gonna be like $12 that we're gonna use to measure our price target, and we're gonna take that from the top of the corrective wave, that second leg, right? And this is about where I was when I stopped YouTubing for a bit. I said, hold on, I gotta take a break. I'm getting busy. And I stuck with this narrative, this belief that the price was falling, and it did start to fall. It didn't re-enter the triangle, got rejected, and it started to drop. So we're gonna take that $12 from the top of that corrective wave, which was a high of 32. All right, that's $20, right? So this is where the price target starts. Theoretically, the measure move down makes a full move, all right, the full length. So if we're to say that we're going to make a 100% move, replicate that first leg, the price target would be 32 minus 25, right? What do you get, 7? That's crazy, because that's where the longest trend would intersect the current price. Let me explain what I'm saying. And there's a price target at $7 too from this triangle. Let me clear up the charts for just a second here. I'm gonna go blank, and I'm going to go to the weekly time scale. Whoops, aggregation period, week, time interval, max available. Okay, so this is what I'm talking about. I'm going to take this high, and there's a trend line analysis I've been using. It's in Fibonacci's book, right here. I've been reading this. It's been the best $30 I've ever spent. It's paid itself off so many times just this week. But you take the high, and then you find the low, right, the next minor low, and then you move the trend line so that you don't overwrite the price at all, right? And that's your downtrend. And so as time passes and new minor lows are set, right, eventually the price falls down here, and then we drag the line up to not overwrite any of the price between the beginning and the end of this line, which would include that hump there, and you draw down. This is the trend. So this is the downtrend that was broken through, and the price seems now to be coming in for a test of that level. This is what I was doing. I was looking at these trend line analyses, right? And this is possible. This is possible. I know, that's crazy. That kind of a dump would just be insane. But then I was thinking about all the COVID cases. We know that there won't be shutdowns like in 2020. That was pretty clear. Biden was pretty clear about that. But nobody said that we wouldn't see occupancy limitations. It makes sense for crowded venues to have those occupancy limitations re-implemented. I know the cases in my state are at twice what they were in 2020. Hospitalizations are rapidly reaching that level too. Hospitalizations are higher than they've ever been. If you read the forward risk statements and such from the AMC earnings reports, you're going to see that they specifically mention you know, one of the greatest risks they have is another COVID outbreak, you know, and it's like that's looking like it's gonna happen. I need to pull that up, I think. Hold on. Okay, here I pulled it up. So this is just the 2021. Well, it's the third quarter results, right? But and then earnings report, and then I searched for COVID, and you get these crazy statements. Have you read this? These forward-looking statements may include, among other things, statements related to AMC's current expectations regarding the performance of its business, financial results, liquidity, and capital resources. Blah, 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 blah. And it talks about measures being taken in response to the COVID-19 virus, and then the available information regarding COVID. Now, they say these risks, trends, uncertainties, and facts include, but are not limited to, risks related to AMC's ability to obtain additional liquidity. Okay, think share offering. The share offerings that Reddit denied were a bid to obtain liquidity, right? But they say, okay, the risks related to AMC's ability to obtain additional liquidity, which if not realized or insufficient to generate the material amounts of additional liquidity that will be required unless it is able to achieve more normalized levels of operating revenues, which it hasn't, likely would result with AMC seeking an in-court or out-of-court restructuring of its liabilities. So that sounds like that they'd file for bankruptcy, essentially. That's what it sounds like, or something close to it. We know Adam Aron is doing some restructuring of the debt now, and that's a big deal. That's a big deal. That's the company signaling that it doesn't have that liquidity that it was looking for. All right, basically the earnings reports have been like optimistic and upbeat, but these forward-looking statements have been releasing the company of being responsible if X, Y, and Z occur. All right, and what we're seeing is a COVID-19 outbreak, and this seems to be, you know, a thing. The next quarter is going to be really interesting. These earning reports need to get better, and if COVID-19 has a bigger impact than we had expected, that's going to bode very poorly for the stock. That could happen. It's nuts. I know it's nuts. Like, but this is the worst case scenario. All right, we have a bad news event. AMC has liquidity problems. So, okay. So that could happen. All right, we have this huge downtrend that was passed through, and now I think the price is returning down back to that downtrend. And to do that, it needs to reach around $7. It's possible. I'm gonna take so much heat for this one, but this is just what I see. This is my journal, okay? I'm not here to push anyone's narrative. But I think I have a little bit of a right to say, hey, my analysis has been pretty good, really good. I've been making money on my analysis without regard to how much people like it or not. Like, if it makes you uncomfortable to hear me talk like this, like, I'm sorry, but like, I've had a couple of really good weeks because of this forecasting, which has been bearish. I can't change that it's bearish. It's just the analysis. So let me zoom in on this trend analysis I did. So here I have an external and an internal trend line. That external trend line isn't going to overwrite any of the price, all right? And I formed it the same way I did it, just as you saw, where I went from the high to the low, and then I just brought the line up until the line did not overwrite any price. And then I did an internal as well. And I did that because the peaks here and here, I'm gonna mark those with some arrows. When I connected those two peaks, I noticed that it was parallel. The trend would be parallel, so then I drew the internal trend line as well. So what we're looking at, I believe, is a series of measured moves down. Let me get Bulkowski's website pulled back up here. Yeah, enough of that. Enough of that. This is nuts. I never thought that the story would go this way. I was so certain we would see MOAS at the end of November. Like, I was so certain. Like, there was no doubt in my mind that this thing was going to explode before the end of 2021. I never would have found this coming. And I was just lucky to have found Bulkowski's technical analysis to help understand what is happening, right? So the first leg of the measured move down has a measured move down nested inside of it, and Bulkowski talks about that in this book. This is amazing. I can't believe how much I have learned from these books. So here's the first leg, right? And then a corrective phase, and this would be the green one, and then the second leg, which is this red one. So you have 1, 2, and 3. That's the first measured move down. And what's crazy is that I believe that this first leg, its 3 waves, are only part of the first big leg. The first big leg has been found. There has been a bounce, and this has all been corrective bounce. That's why the implied volatility has been dropping. That's why the RSI never passed into bullish territory, because the momentum is still in favor of the bears. The bears still have a lot of control. So now we see the end of that second leg, and this actually occurs at a key Fibonacci date. I was wondering how that date would play into anything. They, in the past, have signaled major lows or major highs. Of course, I started the study at the point at which the price is dropping to $7, and that's not going to be on here. But anyway, I digress. You can see how that date right there, boom, signals the start of the second leg of that huge measure move down. And it's a big move. It's going to be a huge move. Let's see here. I mean, you can see it. I have it drawn all the way down to 7 just because, like, that's what could happen. Because the price is so high. It's ridiculous how high it is when you think about it. Like, it's nuts. That's why the short interest is so high. It's like, what? That company's priced at what? And like, so anyway, you can see that this week that second leg started, and we came through that double bottom target from the double bottom in 2020, and we closed below it. Look at that. The day started, we had this funny run up, remember? And if you're paying attention, you'll actually see another measured move down. This is the first leg of the measured move down, and this is the corrective wave. And that corrective wave peaked at the top of this candle. And this measured move down is quite small, 1, 2, 3, 4, and then a corrective phase. So I would expect, like very possibly next week could be a repeat of this leg, and that would be completing the larger measured move down as well. We could see the end of the downside next week, I think. There is a descending triangle that could be forming, and I've put some circles here to show where the open interest is in next week's options chain. The open interest would, if like the open interest indicates where the price may end, then we'd be at one of these two prices. This so just looking at the puts open interest, I saw some really funny open interest on this January 7th $23 contract, right? And I said, wow, that's really weird. There's like 10,000 open interest, and there's like no puts like around it that have that much open interest. And so I just watched that level for a few weeks, and that's exactly where the price ended. You can go back to my old videos. I think it was like on December 17th, I think. You can see I have this circle here, and that's exactly why it's there. It's because I was just like, hey, maybe if the open interest indicates where the price is going to go, that's where it's going to end. And that's exactly where it ended. That's hilarious. So now I'm watching these two levels. So next week, we could be down here. We could be ending down here, sub 20. Finally, right? Finally sub 20, probably. Or the price continues to rebound. But, I mean, that's just not likely. This is an increasing trend. This trend is gaining speed, it's gaining strength, it's accelerating, and this is a retracement, these two candles here. This is a small measured move down, 1 and 2. And you can see that the RSI did pull up a little bit, but not very much. And it didn't reach oversold yet. It got close. At 31, we might as well call it a touch, but it didn't reach. It's very possible that this could still turn down and go into the oversold region on the daily. There is room for more downside, is what I'm trying to say, looking at these indicators. The implied volatility also dropped a little bit, and that's because of the retracement, right? Right now, the volatility appears to be continuing downward. I won't be looking for a double bottom until the price closes above 32, above the last minor high, right here. So, I guess that's what I have for this video. Yeah, it's not looking bright. if you're a bull, it's not looking bright. I mean, I think I might be switching to calls next week. There's a chance of that, but that $25 level is going to be very hard to get through, and whether or not we even test it's a question, because again, the price closed below the price target, the big one, the last one we jumped off of. So Yeah, interesting times.